Hey, hello, folks. Welcome to Pro Trader Strategies. My name's Eric Wilkinson, and this is Spotting the Trade. We're going to get you folks what you need to know before you roll, and that's going to be talking about the economic data, how that impacts the overall markets with a little market analysis, maybe sprinkle in a little geopolitical fodder to round off that analysis, and then finally talk about some strategies we could implement into a portfolio based on the assumptions we come up with here. All right, so without further ado, economic data today. The only thing we really got here is the National Federation of Independent Businesses. It's the NFIB. It's a great gauge for small businesses. Remember, yesterday I talked about this as a key driver or a key data point that we want to look at, because if the small business is starting to hurt, then those guys are the ones that create real velocity of money. The big Walmarts, the Targets, big box stores don't create the kind of velocity of money like a small business does, because they spend money in their own little communities more so than these big behemoths. That money goes back to the corporate office and then gets dispersed there, and then that money gets spent in other ways. But when we're looking at the small business, those guys are the ones that spend about 80% of every dollar spent in their store back within the community. And I can't remember how many miles it is, but it's not very many miles away that they will be spending those monies. So that is quintessential of a good economy. Now, with that said, the NFIB came in at 89.5, expected to be 92.6. So we've consistently seen this number deteriorate over the last year. So lowest number we've seen in the last, I can't even tell you how many years. It's probably been since 2013. That was the last time we saw a number this low. So consistently eroding away at this National Federation of Independent Businesses, small business index there. So like I said, not a good sign for what kind of traction we're going to be getting in the economy going forward. Now, this afternoon, actually more so the evening, we're going to be getting some good economic data out of Great Britain on their GDP numbers and manufacturing numbers. Then that bleeds into tomorrow, where we get a lot of economic data from some of the smaller countries, but we're going to be keeping our eye out on our CPI, Consumer Price Index, to see if these manufacturers are passing on inflation to us here as the retail investors. And we obviously get the crude oil inventories as well. Oh, and the Bank of Canada's monetary rate is going to be in check as well. Right now they're at 2.25, so they're they're at 2.5. They're going to be looking to move to 2.25, kind of lockstep with us. All right, let's get on with the overall market to see how they're being affected by all this data. We can see crude oil is coming off in the overnight sessions here, selling off below 100. That's a good thing. This National Federation of Independent Businesses not being very confident should lead to some weakness here on crude oil, because those guys are not going to be thinking they are spending a lot of money on inventory or anything else going forward if they are not confident in the way that the economy is looking. That's going to lead to lack of demand there. That's the reason why this price is coming off, is lack of demand, not increase of supply. We really, truly need to see an increase in supply in order to be able to weather these recessionary headwinds that we have. Now, I'm not saying we are in a recession. I know that a lot of people are trying to jump on that bandwagon. I don't think we're there yet, but we are very, very close. One of the things that could stave that off is crude oil coming off and staying consistently below 100. As a matter of fact, I'd like to see it get down into the 70s or 60s, to be quite honest. And all that really needs to be said there is, hey, we are going to start pumping oil here in the United States and opening that back up. That would cause crude oil to come off, and all of the other levers and pulleys in the markets would follow suit. That would bring up the deteriorating confidence in the economy and this administration. All right. Bonds continue to buck this trend after they got above that 50-day simple moving average. It seems like they're kind of getting comfortable there. Now, we've talked about this, that we're starting to get this whole swing in the yield curve where we're starting to see interest rates in the back end start going lower. That's what this means. When you see price going higher, it means interest rates are going lower. They're teeter-totter effect. As one goes up, the other goes down. They're inversely correlated in that regard. So we're seeing bonds move higher. That means interest rates in the long term are moving lower. And what do we still know as a mandate here with the Fed? We've been hearing these talking heads talk. They're still talking about raising interest rates another 75 basis points at the next meeting. So that puts these guys in the bonds, the longer end, somewhat of in a box, because the shorter term interest rate is moving higher, and they're basing their interest rates off of those shorter term interest rates. So when we see this flip happen, that's a key sign that there is a disconnect between the market and the policies of the Fed. All right, gold futures continue to slide. Nothing to see here other than there is just no love for gold. I was expecting to see with the inflation that we were going to see some more money put into gold, but folks are just sitting on cash. We've talked about this. They're not too concerned about the short-term sell-off here or this correction. They want to have their money sitting in cash right now so they can allocate it quickly. They don't want to have to try and roll out of another market and into a new one. They want to be able to come in very quickly. I think that they must be waiting on some kind of news like there's going to be oil fields opened up or something, because it doesn't seem like this is going to be a very short-lived sell-off. It feels like we're still waiting to grind a little bit lower, to be quite honest, in the equities. Now we've got Bitcoin back below 20,000. I'm sorry there. It's something to note here. If we take a look at something like NVIDIA, I'm looking at this as a trade for the short iron condor videos that we're doing here. And we're going to be setting that up around markets like this for a pop or drop. I don't know which way Bitcoin's going to go, but I know it's going to be directly correlated as a lagging indicator here, because NVIDIA acts as a lagging trade to Bitcoin. So if Bitcoin's starting to make a move to the downside, you are going to see the follow through happen in the following days with NVIDIA. So it's a great one to trade against that. You can see they're very set up, but almost one candle behind with NVIDIA when I'm switching these back and forth. So I'm looking for a strategy that we can implement around this. I think it's going to be the short call butterfly, and we'll show you how to build that strategy out for a big move that's imminent in something like NVIDIA. All right, VIX starting to spike, despite the fact that every day we seem like we start out with the VIX higher and settle down throughout the day. Today it seems no different, but right now near the highs of the day on the NASDAQ, or the morning session, I should say, we've tested this 50-day simple moving average several times. You can see we've got a topping confirmation here. So weakness, or risk, I should say, is to the downside, despite the fact that we are near these highs right now. Dow Jones Industrial Average not making that recovery overnight. We were seeing this as the confirmation yesterday and follow through today. So topping pattern coming up near that 50-day simple moving average and then selling off. Again, all of these charts look very different. Even the S&P is looking a little bit stronger. So we're seeing NASDAQ, it had the most weakness recently. So of course it's seeing some strength right now. So we would look for NASDAQ to start making these positive moves before maybe the rest of them, because the Dow Jones is held up pretty well. So is even the S&Ps comparatively. So when we're thinking about sector rotation, maybe some of that money came out of the NASDAQ and into the Dow. We could see that rotation out of the Dow into the NASDAQ. So we could see a couple of those days where we start seeing the risk on trade, if you will, the risk on trade these days, which would be rolling out of the Dow, which is risk off, into things like NASDAQ, which are more volatile, risk on. So that might be why we're seeing a little bit of Dow Jones weakness with the strength over there in the NASDAQ, because maybe we're seeing a little bit of sector rotation into these tech names there. All right, overnight you can see pretty weak. I don't know if that was really necessarily on the economic data that we got overnight. Not really anything that would have made this move. We did have a couple of Fed governors speaking, but I think that really what we're just seeing here is some overnight weakness. Folks just aren't super confident coming into this week that anything is going to change, to be quite honest. So yeah, we might be seeing a little bit of strength here coming into the close, but that's just to cover this overnight inventory short there. The shorts are looking to cover before the opening, and I bet we're going to see another down move with that National Federation of Independent Businesses, the NFIB, the lowest number that we've seen since 2013, from what I can tell. So that just not a very good sign there. Not a very good look, to be honest. Amazon coming out with some news here today, not making much moves, though. I don't think there's going to be a whole lot here behind this move. I think the real thing to be watching today is NVIDIA. I think it's going to be a fun one for the next couple of months as we start playing back and forth between Bitcoin. As soon as it starts wanting to go back and forth between this 20,000 mark, that's going to be the thing that really starts setting me off. And if we go below 18,300-ish, right around that level there, that's when we're going to start really being on edge, to be honest there. So that's that 18,300 here. That's a Fibonacci I have on the 23. So that's why I'm calling out that number there. Break below that, it could be off to the races to the downside. Any type of strength, we could get some pop, but I think the risk right now really is to the downside in NVIDIA, and that is because Bitcoin not looking too good right now, folks. All right, that's all I got for you guys. Stay tuned. We're going to be doing a couple of webinars this week, so make sure you guys are subscribing and hitting that bell. The bell lets you know when I come in unannounced with these videos. I'm doing the webinars pretty much spot on the time, so you can make sure you can set that on your calendars. All right, that's all I got. If you can't take that, take it easy. Oh, don't forget to hit that like button.